which is a big sticking point for the Trump administration. We got to get the interest on the debt down, so we need the rates to come down, not go up. And so, yeah, all eyes on the MOVE index. And of course, we're whatever, not even 2 weeks into this, so we'll see how long this goes. If it stretches out, it could be really bad. I think you've put some targets on Bitcoin, maybe up to $250,000, even higher, longer term. Do you think this disrupts that? Like this is sort of breaking news. Does this sort of disrupt those long-term sort of targets, or does this cause more short-term disruption but doesn't really affect that long-term outlook of it?
It accelerates the long-term trend. Wars are inflationary. And so everyone now has to have their own energy supply. They can't rely on the global energy markets. They have to have their own food supply. They have to have their own logistics supply chain, right? This is as we keep disrupting all of these nodes of global commerce by these wars, everyone now needs to have their just in case inventory, and that's inflationary at a secular level.
Yep.
The over leveraged system cannot support the amount of debt that's going to need to get issued to finance that, and so it's going to be inflationary. They're going to resort to printing money, and every war the government prints money. They start doing it at some point. They don't start out that way, and obviously lots of assets go down in price until that situation happens. But if we're talking about an asset that is very responsive to liquidity, when that liquidity is going to be provided to finance certain aspects of the war or the rebuilding after the war, then that is inflationary, and that is what is going to carry Bitcoin to much higher levels in fiat currency terms.